Hi, good morning, everyone. And welcome to today's Let's Talk About the Market episode number 36. Uh, we are seeing some decisive move in the Nifty index, and I think there is some clarity that is also emerging in terms of trends. So, what to do next is what we'll be discussing about. So, let me quickly share my screen without wasting time because there are few things and concepts that needs to be explained as well. I'm sharing my screen and you can let me know once you all are able to see my screen. Okay. Wait, let me. Sorry, I forgot to do all this today. Yeah. So let me know once you all are able to see my screen. Yeah. Hi. Good morning, Atul. Okay. Thanks for the confirmation. So, yeah, when we look at the Nifty index, some interesting trend seems to be developing. So let me first talk about Nifty and then speak about the sectors. So I think one thing that I had mentioned yesterday was that if we break below the averages, it will not be a good sign. And in fact, sustaining below the averages will further cause some pain. Yesterday we broke the Nifty index broke the hourly averages, and today it is at 24,773. In fact, I was hopeful. That maybe at least for once, 24,800 will be defended, which is nothing but the 61.8% retracement. Maybe towards the day end, that might end up holding. But, one broader thing that has happened is that firstly, the failure of this breakout. Okay. This itself is not a good sign. But in the short term, what is happening is that we have we almost had 6 days of consecutive negative daily close, including today. If we end up closing in negative, then so this is one thing that is happening. Uh, also another thing that is important is that this breakout was there, it is retesting that. In fact, for now it has gone below that, but of course we need to see this in a closing basis as well, as to what happens. Now, why I think that there could be little bit of bounce that is possible. Okay. And maybe if it has to fall, uh, even if you try and short it over here, it might not be a good bet. I mean, especially if you want to do it right now, that is because when you look at, say, the swing and the average swing. Now, if you remember, yesterday I had spoken about this, right? Swing was in oversold zone, but if you see average swing, it was not. But now even that is coming to an oversold zone, right? Even the average swing is coming to an oversold zone. Also, if you see the diffusion indicator and the percentage of stocks with RMI buy, even that is now coming very close to this oversold zone. Okay. So, out of the 4 5 indicators that we use, that is percentage of stock about 20 SMA, this is still a little far away. But as against one indicator yesterday, now there are three indicators that are either in the oversold zone or approaching very very close to the oversold zone. So once the Nifty index, say for example, it is around the 61.8% retracement level, like we see over here, right? It is around the 61.8% retracement level. Of course, one may argue that it has broken below this, but so far, at least the closing, I mean, it is not breached on a closing basis. So that's where maybe in the near term, what can happen is that there can be some bit of pullback. But ideally, the best setup would be that if this pullback happens around the averages and from there it turns down, I mean, that will be the better setup for the next leg of down move. Also, if you see RSI, okay, that also is almost around 21 or so, and that again is hinting towards the oversold zone as well. Just a minute. Yeah. So that also is hinting towards an oversold zone. So that's where maybe some bit of pullback can be possible. And if you see many other indices, okay, while the Nifty index has broken below that, but if you see, for example, say Nifty Midcap, okay, you do the retracement, it is at the 61.8. Okay, you do small cap index, it is at the 61.8% retracement, right? You can see over here. If you do Nifty 500, I'll have to do CNX 500. Okay, again a similar case where it has retraced almost 61.8% of the entire rise that it has seen. So, given that it is approaching that important support level and many of the indicators are in oversold zone, there is a scope of a pullback. Okay, now, maybe playing that bounce will not be easy, but say if you get a bounce towards the averages, okay, that's where it might end up making more sense to create position. But as of now, probably the expectation will be that there can be some bit of pullback that is possible, maybe in the coming days. And also, if you see the OIPCR, okay, so the way to check OIPCR individually is that if you go to options PCR, okay, now I'm removing everything and I'm just putting the raw data. Okay, the raw data tells you that we are towards we are approaching towards the lower end, okay, of PCR. So you can see that whenever this PCR is low, there is usually a short term bounce that is possible. It might last for 1 day, 2 days or 3 days, but we are sort of reaching there. Yesterday the PCR was say somewhere around 0.68. So normally we would say that anything below 0.80 technically used to be the oversold zone, but anything around zero point 0.7, zero point 0.6 and all, it does end up making a good case of oversold zone, and there could be some bit of pullback that is possible. But again, I think the way the Nifty index has fallen, don't expect it to break and make it to the new high. I mean, even if it does, it will have to go by the stages, which means that it will first have to break above the averages, then it needs to break out from the channel as well, and all those things will occur. And only then probably we can say that a reversal has happened. But to preempt a reversal from here, it would be very difficult. That is because of the way it has fallen. Okay, so none of the breakout levels were respected, and that's where it raises doubt. Now, while I was checking, there were some stocks that, notably, it is actually the LNT, which seems to be breaking out from this range. But now, see, what happens is that while this looks like a very very good setup, but say for example, if the Nifty index is going to fall, then I am not sure whether this breakout will sustain or no. Okay, so had it been that we were in an uptrend, maybe I would expect that this consolidation to break and eventually this consolidation to break. But given that we have some mixed picture in the Nifty index, that's where this will be suspected. Maybe say for example, if I wanted to create positions, maybe I might not create 100% position, but even if I do, I would do it with a strict reversal levels, that is basically this swing low or this swing low. Okay, but yeah, there are some sectors that are definitely that is definitely trying to outperform, or they are looking a bit promising. Because LNT comes into infrastructure. If you see the RRG as well of infrastructure, that has been improving. Okay, and that has been picking pace. So that is one. In fact, then I saw commodities is where the momentum is still there. In fact, metals, the momentum is still there. But now you need to understand one thing. RRG is you can say relative performance. So say for example, if Nifty index falls by 5% and these fall by only 1 or 2%, they will still come into the list of outperformers. So that is one thing that you need to keep in mind. Okay, so when the trend becomes bearish or is going to turn bearish, that's where you might want to focus more on the spaces where the momentum is losing steam, and that is where probably in the shorts you can make some opportunities. But I mean, going long when the market is not that great, I mean, you can definitely get results, but might not be as efficient as trying to short the weaker ones. And who are the weaker ones is probably where RRG will help you to find it very quickly. Now this is one. So as I told you, I mean, there are sentiment indicators which is pointing out towards weakness. Okay, I mean, which is pointing out towards oversold zone. Now even if you see, basically based on the chart patterns, everything, many important support levels were breached. And more importantly, now the Nifty index is trading below the hourly averages as well, so which is never a good sign. Okay, now one thing, I think this is a perfect time to share with you, how to think about sentiment indicators as well. Okay, because you might say that, okay, few days back you were very bullish, and you were saying that the medium term breakout can occur and so on. In fact, to be very honest, when this zone broke on the upside, I did think that that is going to be the case. But that's where you have to sort of adjust with the market, and be mindful of the fact that what the market is doing. So when this support zone broke, and in fact when the support zone broke, when we went below the averages, that initially was the warning sign. Okay, the first warning sign actually came when this 40 hour was broken on the downside. Okay, this was the first warning sign. After that, a bigger warning sign was break below the averages, and now 24,800 is sort of like a last defense for the bulls. And as I mentioned, why we are considering 24,800 is because it is around the 61.8% retracement level of this entire rise. Okay, that is why, that is what it is. But the way it has fallen, I just suspect that there might be bounce, some bit of bounce that is possible. Uh, Not much is the expectation. And to what extent can the bounce will be? So firstly, you have to understand that this channel was broken on the downside. So initially, though, this only will act as a resistance. Okay, only if the lower end of the falling channel is broken on the upside, that's where you start expecting a bigger retracement. But otherwise, if at all the pullback happens, so this say is somewhere around 24,908. And mind you, this every hour keeps will keep going down. So you need to understand that dynamic level. Okay, so that is what the expectation will be. So now, as I mentioned, that you would say that a while back you were bullish, and you were sounding that a big move can start. So, in terms of positioning, again, what has happened is that in the past uh, couple of days, okay, we have started to see some bit, I mean, minor short positions getting built. Okay, nothing very significant as such. But when important support level breaks, then you start thinking, can they again build shorts and come back to the previous low? I mean, that is the risk that we start facing. That is because, see, something of this sort happened in many of the IT stocks as well, right? So say for example, if you see Tech Mahindra and all those things, I was highlighting this earlier. I mean, in this pullback there was short covering, but now again when they are falling, shorts are adding back. So this is I mean, this is the risk that we face. Okay, when we are talking about the medium term thing. So when is it that you try to think about a reversal? Is when, say for example, now if the RMI goes down and again gives the bullish crossover, that's when you again start thinking about a short covering rally. Okay, provided none of the important levels are breached from a medium term perspective. So from a medium term perspective, still this might be an important support level. But given that the way it has fallen over here, there is a real risk of this support zone getting retested. Okay, and see, you always have to think when it is bullish, when the markets are bullish, you have to think, how far can it go. But when the markets are bearish, you have to be mindful of the risk also, that what possibly can go wrong. Now, why I'm telling you this is because you can see over here, basically the daily RMI went into sell and this averages were broken. So now uh, a lot more risk has opened up. The reason being, say for example, if you see weekly, we did not get a bullish crossover over here. Okay, the ideal scenario would have been, break off this zone plus a bullish crossover. Then the conviction level would have been very high of an up move. Okay, one good thing that has happened over here is that RMI had gone back to the zero line, so that is not a pain. And in fact, even the bands are tightening. So maybe even if it goes lower, this zone should act as an important support, provided the bands keep contracting. Okay. Uh, the risk now is of the monthly chart, where you see that the RMI is not complete. Okay, and that's where we have learned about this, that when the Nifty index is rising higher, okay, and the RMI goes into sell, so that is the time when 20 week needs to be looked very closely. Okay, if that is held, then the up move can continue to stretch, and you might end up getting some false signals as well. Okay, now that seems to be happening from this zone. Okay, uh, now the 20 month in this case is somewhere around 23,957. Okay, so now there is a risk that has opened up, that can it test this and can it close below this. I mean, those are all the risks that has opened up. So, but from a medium term perspective, as of now, this level is held. So maybe we are not looking at that bearish outcome. Okay. It's only when the 20-month breaks on the downside is where the real risk will start emerging, that whether, are we going to fall towards the lower band or no. But as of now, what we can see is that because weekly is in sell, there is a risk of this zone to be tested in the short to medium term. And if this zone is broken on the downside from the short to medium term perspective, then the test of the monthly average of 23,957, that will start emerging. Okay, the major risk of a deeper correction will come when the 20-month breaks. Now you might say that during the month, what if it breaks and if closes? I mean, that is something that we might have to take the judgment while we are during the month. But a monthly close is required, basically to think of uh, I mean, to even think of this correction. If it falls during the month and then it recovers, then maybe whatever would be the low, that would become an interesting and important support level. But now, when is the next time that I will start being a little more positive, is when we have RMI also giving a bullish crossover, and some key levels will be broken. So, say in this case, actually, if you now draw a trend line, okay, I think that probably this will become an important zone from a medium term perspective. So, the best setup would be that if this line is broken and on the weekly chart you end up getting a bullish crossover as well. So such setup will become like extremely lucrative setup on the bullish side. But until that doesn't happen, there is a risk of a correction. And in this case, what can also happen now is that can there be a rebuild of short positions, and FIs coming back towards the lower end of the range. I mean, those all sort of risks are for real, and that will start emerging. Okay, and you cannot rule out those risks. So that is the broader point. And more importantly, we need to also be a little more open then for a deeper correction. So As of now, the thinking is that there can be some pullback that is possible, because we are in the 6 day of decline. But whether that decline will be meaningful or not, I don't. I mean, whether that pullback will be meaningful or not, I don't know. But what it will definitely try and do is that relieve this extreme oversold conditions. Okay, only when the trends are very very strong, okay, like you see over here, that is the time. What may happen is that you might just get 1 or 2 days pullback and it will keep declining. Okay, I'm not sure if that would be the case. So basically, think of it this way, that there is a pullback, this relieves the momentum swing, then again there is a decline, pullback, decline, pullback, and in that case, you end up getting divergence, and only then you end up getting pullback. Even if that happens, what we would at least conclude is that the pace of the decline is going to slow down, right? So this becomes a very important information from, if you're a weekly option trader, right? So that is where it is. I mean, think let me put it the other way. When swing and the average swing both are in the oversold zone, it is very difficult to make money on the downside, especially if you're thinking of 1 week kind of perspective. Because whenever, let me put the swing template and let me even plot it while we are in the downtrend. Okay, so you can see over here that almost both of them came to this oversold zone, say around on 22nd October, which was after this decline, right? And after this decline, you can see that for next 5 to 6 days, I mean, there were ups and downs, but broadly it had gone sideways. So while if you all are able to time it very precisely, you might still be able to make money. But broadly, what I would expect is now some kind of premium eating, and probably some sideways consolidation, if not a bounce. So if at all we end up seeing something like this, where and you end up swing recovering back, I mean, that would be even good setup for the next leg of decline. Okay, because in this sideways consolidation only, we ended up seeing the swing rising higher. Uh, even such things have occurred. Now, say for example, something like this, a decline and then a sideways consolidation, and in this sideways consolidation the swing ends up rising higher, and then we have a breakdown. So there is this next leg of decline that happens. So if those sideways sort of pullback comes, like over here also you see decline, sideways consolidation, and then a pullback, and then a correction. So the lesser the pullback in in the counter trend rally, the better it is for the existing trend. I mean, that the more powerful that existing trend will be. So that is where we are at right now. Basically, we are at an important level from a short term perspective, where probably some bit of bounce can be expected. That is because, like I told you, the early RSI and all those things, I mean, those are around 19-20 sort of levels. And this is not just for Nifty, but maybe across the indices. Like you see, for mid cap it is 13, for small cap it is 12. So maybe some minor pullback can be expected, but all I would expect is just a pullback and not something great reversal. And you remember, we were talking about yesterday only about pharma index and so on, right? And this today, if you see, pharma index has broken this important support level with a gap. Okay, and as I had mentioned, I think earlier as well, anything. Okay, sorry, my bad. It had broken yesterday only. So probably it was healthcare, which, so healthcare also gave a breakdown yesterday only. So all this gave a breakdown yesterday, and today we have this news, and that's where I mean, tracking technicals becomes extremely important. You can see that the sell crossover had come over here, basically on this candle, right? And then when the averages break and the moving averages break, I mean, that's where the things can start getting much more scary, right? So now, as long as if you see on the RRG chart, these things don't turn around. Okay, this might end up becoming a laggard, be it IT, pharma, healthcare. There is some sort of pickup in the momentum that is seen in FMCG, uh, but a little bit on MNC as well. But you need this trend to continue for a day or two at least, even to think of some sort of outperformance. But again, I'm telling you, even if the momentum is rising and the Nifty is falling, these might just end up outperforming and not necessarily give you those absolute positive return. So this is something that you need to keep in mind, and also be mindful of the indices like say PSE. Over here the momentum is starting to lose. In PSU bank still the momentum is good, but if this also again starts seeing some dip in the momentum, then it will not be a good sign. Okay, I mean, then there is a case that a correction or a consolidation can happen, in which case basically say Nifty PSE. Okay, see, you can see over here that the first warning sign has come of a bearish crossover. Now, if the averages breaks, then it might not be a good sign. And in fact, even over here, if I draw the trend line, it has broken the trend line today. So there is I mean, if it closes below that, then again it will not be a good sign. So all this risks are emerging, and all this is happening when even the momentum is starting to dip, right? So you need to be mindful of these patterns, and now probably concentrate a little more on the things that are dipping lower, because that is where probably in the on the short side you might end up getting some opportunities. Okay, so this is what we have for today. As I mentioned, some key levels are getting breached. I'll just sum it up. There can be some bit of pullback in the near term, but the short to medium term picture has become a little bleak, and slightly more bearish, because of the developments that we have seen in the past 1 or 2 days. So there can be a little bit of pullback that is possible, but I am guessing, looking at the structure, that the pullback might not be that sustainable. Okay. Uh, so Atul, I did explain the concept of short covering and long unwinding. I mean, as I mentioned, you try to combine it with the trade setup. So when things starts getting bullish, I mean, say for example, RMI is getting bullish, prices are crossing our daily averages and so on. That's where you start thinking of short coverings that can happen. Where, I mean, you can look at the stocks where huge short positions are there, and that can play out. Now, I'll give you one example also. I had this on my mind, and it just came, clicked me a couple of days back, but I think it was basically Axis Bank, and I think we had discussed this also, that there was a huge short build-up that had happened over here. Okay, now eventually what has happened is that there has been a short covering rally. Okay, now you can think of a short covering rally as long as the important levels are held. So you can say, for example, daily averages, if that is held, RMI, if that is not in sell, I mean, till that time, you can expect the short covering to continue. But if the important levels are broken on the downside, then again you might fear that can something like this happen, and can the stock fall further. I mean, those all risks are definitely there. So that's where you look at indicator and you look at price action. I mean, that is where it will tend to give you a lot more clearer picture. Okay. FMCG, as I mentioned, Rajdeep. So, okay, let me just look at the chart as well. So, on RRG, we saw that some bit of momentum pickup is there. But again, in price action, you are not seeing anything. So, even if I do, say, a parallel channel over here, okay. So, if I do this parallel channel, this is an important support level. I mean, if this is held, then maybe, I mean, So broadly, I would put it this way, that this is an important support level. If that is held, then maybe you can expect some bit of outperformance or up move as well, and maybe FMCG index might end up acting as a defensive sector. But if this zone is not held, then there is a real risk of even the lows to be retested. That is because one thing is that this was a failure of the breakout as well, right? You see over here, this was a failure. I mean, there was an up move, but then it fell down once again. So failures are never a good thing, and they especially occur when things are in corrective phase, or it is probably gonna head lower. That's where you get all these things. Say for example, something like this breakout happened but did not sustain, and then it fell down. So if something is breaking out and is again going below the breakout levels, that is never a good sign to have. Okay, can you touch on hinging as you have been covering it in the last? Okay, Deepak, so let's check. So hinging was seeing some pickup in the momentum. Let me actually do it with metals only, and I'll take the benchmark over there as Nifty 50, because even that benchmark change will dramatically change the positioning of the stocks. So hinging, if I see this with metals also, okay, now you see this is Nifty 50, right? And here, so see over here, all this while it was rising, there was a little bit of pullback and again rising higher. So I think hinging had come on the radar mainly because of this. So in the past few weeks, it had started to turn around. So here you can see that the turnaround had happened, say, on 2908. Okay, 2908 is what? Okay, it was this. So I think Friday must be some holiday. In trading view, you might end up seeing the chart of, I mean, you might see on the hover as 25th. So hinging, if I do, sorry, hinging, if I do weekly, okay, it was somewhere over here that the turnaround had already started to happen. And and see, basically now when the Nifty is turning around, okay, now see, let's get the context over here. Okay, Nifty is falling, and RMI is also selling out over here. And in fact, with today's decline, we are seeing a sharp reversal on the daily RRG as well. Okay, so this is not a good sign. Okay, now there is a real risk that it can go to weakening, and from weakening, if it doesn't turn around, it can even go to lagging. So in such cases, the way to deal with it is that firstly, you keep averages as the reversal level. Now it depends how tight you want to keep it. I mean, given the current market context, I might want to keep it just at somewhere over here only at 20-day. If it breaks, then basically what happens is that the support zone is broken and the 20-day is broken, and then the risk will start emerging of a correction, right? uh, the second thing is that maybe, say, if you were more of a positional guy over here, then you might want to keep a reversal level somewhere on the weekly chart. So say if the weekly averages breaks on the upside, then it would mean that this rise was not able, I mean, this breakout of the averages was not able to sustain, and in fact of the decline, you ended up getting, I mean, you just retraced, the stock just retraced 38.2% and it fell. So smaller retracements are never a good sign, and that's how you will deal with it. Okay, way, I mean, see, if you're a short term trader, when is it that you will start looking at something like this? Is that when the momentum starts picking up. The better setup would be that if the weakening, I mean, if it goes to weakening and somewhere from the down it starts turning around, that will end up, becoming a much more lucrative setup. But in that context, you also have to understand that if the momentum is rising higher, that means hinging is going to outperform, right? But if Nifty is gonna fall and hinging is gonna outperform, then it might still mean that maybe negative returns, but less negative returns in Nifty index. I mean, that is something that you need to keep in mind. So if the momentum is turning around for hinging and the market is also turning around, then such setups might end up making more sense. So always combine it with daily and weekly. And as of now, because even these things are smoothened, right? So maybe it is only 1 or 2 weeks of decline is where you might see some momentum turning on the downside. Until then, that may not happen. But say something like National Aluminium, okay, over here, the momentum has started to fall. Then in such cases, you might be a little more careful. Okay, I hope that gives you the explanation of how to deal with it. So it is mainly looking at the charts and understanding the positioning of RRG. PSU banks, I think we did okay. We did not check, but let's check Nifty PSU bank as well. Okay, we are seeing some pullback. In fact, we are seeing a pullback from past 2 to 3 days. Now, as I had mentioned, this becomes an important support zone, right? If this breakout is for real, then this support zone should not be broken on the downside. If this breaks on the downside, then I'll have a real risk of basically averages getting tested. And if averages breaks on the downside, then the risk will start emerging of this low as well. So when you're trying to deal with it in the real time, your first warning sign will be a break below the 40 hour, okay, which has happened today. Now you think of it this way, that you will have to I mean, if you are very bullish about it, okay, then you might still want to do position sizing over here, which means that if say you were 100% long, maybe breaking below this, I'm just giving you a method, okay, you can follow yours. But say breaking below 40 hour, I mean, that warrants some caution. Then breaking below this support zone is a furthermore risk. Okay, ultimately everything will be gone when the averages breaks. Okay, but over here, say for example, if the support zone breaks, then even the RMI will get into bearish zone. Okay, so that's where then you'll start thinking that maybe the pullback can extend to averages, and if the averages breaks, then it might get worse. So you might not want to act over here, but you might want to proactively start acting over here by at least reducing the position, even if you are bullish, and maybe adding it back once those risks are out of the way. So that is how you can do it. Uh, Deepak, I don't think there is any such issue because I have been using it in front of you. Maybe what you can do is that you can refresh your screen once, and you can again try and, I mean, you can refresh 1 or 2 times. Ideally, it should not happen, but I don't know if it is happening. Then make sure that you refresh it, and also uh, I hope none of the other user has your ID password, because if they also try and log in, you might be thrown out. Okay, so I hope that is not the case. If that is the case, try changing your password. But I think refreshing 1 or 2 times and then logging in should solve your problem. uh, Mandar, your 11 joining is not okay. I'll need to okay, I'm not sure if those were posted on Telegram. Okay, but noted. I'll give the feedback to the team. Thanks. Uh, Mitanshu, Nifty breaking below 20 week average. Can you please see if the head and shoulder angle that was discussed last month can come into play? Yes, yes, Mitanshu. I mean, those all risks will start emerging now. So as I mentioned, we'll all have to go level by level. But say, for example, because this averages are now broken, there is a risk of this support zone getting tested. Okay, if this support zone is broken on the downside, then the risk of this also being an HNS emerges. Okay, this risk emerges for sure, but I'll tell you the major risk would come when there is a breach of this 20 month that will come. I mean, if that happens, that is the major risk, because then it will open up a downside level probably of 2000 points. Now, I'm not sure whether that will come or not, but that is what the chart seems to be indicating. And ideally, I would think that if there is such negativity in the short positions by the FIs and so on, I would probably, not think of this scenario as a high probable scenario, but you never know. I mean, if the 20 week breaks and Trump has anyways gone crazy, so something like this move cannot be ruled out, where everything happens very fast. So such kind of things also cannot be ruled out. But yes, the broader point is that when things are ugly, you have to think of all the possibilities, all the bearish possibility that is visible on the chart. And when things are bullish, sometimes you will have to negate, I mean, you have to avoid the negative things that we are seeing. Why I was giving this indicator example of sentiment was also because, say for example, I mean, sentiment is negative all this while, right? So at this point of time we were not concentrating. So at this point of time we were not concentrating on extreme negativity, is because prices were not breaking some important levels. When the important level broke on the upside, then that's where we started thinking of reverse, I mean, the short covering rally. Now when things are again turning bad and important levels are getting breached, then I don't know, I mean, this can also go down to 2 lakh or more than 2 lakh as well. So that's where then I concentrate only, I mean, I concentrate on short covering rally only when things start turning around in terms of price action and indicators. But until then, I'll be very skeptical of this. Okay, where, because see, all this ultimately, please understand, are ranges. Okay, is it that we are getting into the new normal where this becomes a range, right? Or maybe the range becomes a little more lower than this, I don't know. I mean, I have no answer for that, because with time things can change. Over here there was a different range, over here we went into a different range. Now is there a range shift? I don't know. And that is why we have to look at charts and try to think of it only when the bullish things are happening. That's where you start anticipate a short covering. Okay. Okay, Deepak, I'm glad you understood. Mohan, thank you. Deepak, thank you. Deepak Vakharia, if you still face any issue, please raise a ticket to the help and tell them that this is the issue. Okay, you can go to help over here, raise a ticket, and there you can use the relevant section and you can let them know that this is happening. Maybe someone from our team will either message you or call you and try to rectify your issue. Srinivas, oil marketing companies. We spoke about this yesterday only. I mean, if you see Hind Petro, it seems to be giving a bullish uh, sort of pattern. But as I mentioned, I mean, if the market is gonna tank, and even if this range breaks out, I don't know, I might not be able to trade that very confidently, or tell that very confidently that the up move is gonna happen or no. But yeah, I mean, the setup overall, if you see, because if you see the weekly charts, they are turning around. Okay, and the prices are above the weekly averages as well. So usually it is a good sign. But yes, I mean, if the weekly averages breaks on the downside, then it might not be a good idea. So you take it HPCL, BPCL in that sense is still lagging a bit, but I think IOC and these two had a very similar setup. But see, because of I think today's decline, now the weekly might not end up coming in sell. And if the weekly, I mean, weekly might not come in the buy mode. If the weekly does not come in buy mode and the weekly averages are broken on the downside, then it might not be a good setup. Okay, so that's where you need to be careful and concentrate on levels. Wherever you're seeing sell crossover and break of averages, just move out. Okay, until you get a next signal, because you don't know how deep will that correction go. Okay, so those are the risks that are there. Sagar, thanks. So the whole idea of doing this live session is that we also teach you the ways how to do it, because see, we cannot think of all the scenarios right at the start, but we are seeing this scenario, basically FI short being uh, being it on a short side for a very long time. Honestly, this is not something that I've seen happening for a while. What it does for the market mood, we don't know, but we'll navigate and we'll navigate it together. So we'll take it day to day basis and see how the price actions are happening. Maybe something new, even I might end up learning. Thanks, Srinivas. Deepak, it seems overall, thanks for relentless market sentiment. Yeah, yes, better to wait for market reversal. Some monthly charts are not getting displayed properly. Uh, Srinivas, so see, some cases the monthly charts might not be visible properly. If there is a split or a bonus, we are in a process of handling that. We want to put some code over there where it automatically adjusts it. Right now, so yeah, those are the only cases where you might see. If at all you come across some names, you please put it in the ticket. We will check it. Okay. Indian Hotel is also breaking the weekly range. Indian Hotel. Actually, Indian Hotel, the reason why right now almost everything would be breaking the range. But I'm specifically interested in Indian Hotel is because if you see, oh, this has been a sharp fall. And in fact, if you see the weekly, Indian Hotel never used to break the 40-week average. Okay. It broke over here, but again came back. But now we are seeing some decisive break. So actually, it's a very, very good catch, Mitanshu. Uh, this entire range seems to be breaking. There is a threat of this range breaking, average breaking, and RMI also giving a fresh bearish crossover. Not a good sign. This had been one of the big outperformers, but the chart seems to be turning very weak. So yes, nice catch, Mitanshu. Uh, RIL, RIL. Let's look at it. See, we are running. We have crossed past the time. I'll take this as a last chart, and we'll have to then wind it up. So nothing special in Reliance. Basically, this is a minor range that it is in. Prices are breaking, going down. RMI is in sell. Nothing great to talk about it at this point of time. It's only when this range breaks on the upside, that's where it might start to look a bit interesting. But until then, there is nothing great which is there in the chart as of now, frankly. Okay, so sorry, can't take stocks anymore. We have already run past our time. So let's see what happens in the Nifty index. As we go, it is still tanking. And if you see the sentiments, the swing has gone to almost 5. I'm not sure how. So of course you will have to wait for a reversal, but such bad readings, typically you would end up seeing a bounce. Let's see if we are able to see the bounce in the next 2 to 3 days or not. Okay. So thanks a lot once again from joining. for joining, and let's try and catch up on Monday and see whether this oversold swing does it lead to a short term bounce or no. And even if there is a bounce, then what is the setup overall. That's what we'll see. But yes, I mean, if at all, even in Friday's trading session it does not recover and it falls, it will be very hard to imagine that the Nifty index falling without any pullback. So anyways, let's see what happens on Monday. Okay, so thanks once again for joining, and let's catch up on Monday.